Good morning. Welcome to day 30 of Momo trading. Today is a slightly different day. Well, not slightly different, but a lot different. You can tell by the screen and the title. I had the opportunity to do a lot of thinking this weekend. And some of you might be saying that I'm crazy. Maybe I am crazy. But hear me out. Today we're going to start trading with real money. And I have some rules regarding that, but we're going to continue doing that for now until I get to a point where I feel like I need to go back to the simulator, if I do. We are going to switch here. So some of you might say, you might look at this cumulative P&L and be like, are you insane? Why are you trading with real money? We just watched you go through 2 weeks of red days. We just watched you lose a bunch of money, theoretical money in the simulator. This drawdown is just going negative. My cumulative P&L looks like a roller coaster. But the thing is that I've already solved most of these problems. The major problems that I needed to solve with backtesting in the simulator. And the money that I'll be trading with is money that I can afford to lose. That's the biggest thing. You know, I display that disclaimer at the start of the stream. You should only trade with money that you can afford to lose. And by the way, my scanners are going off because there is something worth watching this morning, but I'm not paying attention to it for a little bit. So even if something is going, I'm explaining right now. I don't care. But this is money that I can afford to lose, and I don't recommend anyone do what I'm doing until they've back tested and have completely found profitability. But this is money that I want to pay as tuition to see if I'm capable of keeping my head above water in the current cold market environment right now. Because that's basically what I've been doing with simulator, is keeping my head above water. However, I've had the opportunity to go through and retag some of my trades, breaking them down even further, looking through my metrics. I split up breaking news and breaking news continuation, and high of day squeeze and high of day squeeze continuation. If we filter by the setups that I'm going to be trading now, going live with real money with a real strategy, these are the setups that I'll be trading. Breaking news, continuation, high of day squeeze, continuation, gap and goes, and halts. I'm not going to be trading curls. The curling patterns and the VWAP patterns, they haven't been working in this particular market, so we're not going to trade them. But I've had about a 50-50 accuracy and a 1.5 profit to loss ratio. And, you know, I may have been a little bit hard on myself in terms of how well I've been doing. For a lot of traders, a 50-50 accuracy is actually pretty good. You know, the fact that I can have a 1.5 profit to loss ratio technically means that this strategy is profitable if I trade these specific setups. These are the setups that I have edge with. Breaking news. So whenever it's breaking out, when you have fresh news and it's first popping up an algorithm, it's breaking out. Whenever it squeezes through high of day, breaking out. You know, first and second pullbacks on continuation after breaking news or high of day, squeezes. and then the fresh volume at the open on a stock that's gapping up. You know, all of these I know have edge. And the thing about these setups, the more that I thought about them, is that the problem with this accuracy right now is, you know, earlier on, I was trading more quantity over quality. Some of these setups include no news stocks. Some of them include like bad entries in between where I shouldn't be trading. So some of them include higher floats, 14 million shares, 9 million shares. Some of them include trading, you know, lower percentage gainers, 10 to 30%. So the conclusion I came to is that if I severely tighten my quality standard, and I made a new tag as I went through all of my metrics, I call it current strategy approved, and this is related to the flow chart that I talked about a few days ago. About how I want to continue trading. And this strategy is pretty much like Ross's strategy. And so I found 53 trades within my current strategy of severely tightening my quality standard and the setups that I'm willing to enter. And I end up with a 66% win rate with a 2-to-1 profit to loss ratio, including both winners and losers if I would have entered the trade with my current strategy. So this is the strategy that I want to emulate. I back tested, I have the data, and these are the final setups that I want to emulate. If we look at the calendar filtered by this setup, you know, it might be 1 to 4 trades a day. So 2 trades, 1 trade, 1 trade, because these are the only good opportunities that the market has given us. It has, I'll say it again, or I haven't said it yet, but 5 pillars of stock selection. It must have 4 out of the 5 pillars of stock selection, but most of the time 5. So 5 being gain on the day. It needs to be up at least 30% on the day. It needs to be within my price range between $2 to $10. In a cold market, in a hot market, we can increase that to $20. It must have greater than 5 relative volume. It must have fresh news if it's breaking news, but it can have after hours and continuation news if it is squeezing through high of day at a later point in time. And the float must be less than 5 million shares in a cold market and less than 10 million shares in a hot market. And so this is what my calendar looks like after excluding all of the over trading that I did. With the VWAP setups, excluding some of the big emotional trades that I had, where I traded that higher priced stock after like that mess up. And you can see it's like 1 trade, 4 trade, 3 trades, 3 trades. This is including winners and losers for only high of day squeeze and breaking news continuation, high of day squeeze continuation, just the setups that I'm talking about. And the P&L is actually not bad. Over, you know, over 53 trades, it's $500. It's honestly not very much. It's averaging like less than $10 per trade. But we can figure out how to do proper position management. What matters is that I now have a back-tested strategy that I can rely on. The key thing is, though, and I mean, you know, you can look at this cumulative P&L and it's a steady stream up. That's fine. The thing about this, though, I'm gonna open up Notepad, window capture, add one. So what are the problems that I've been having? Over trading. What was the solution to that in this cold market? Trading only fresh news, trading only things that meet 5 pillars, things that are breaking out. So breaking high of day or fresh pop, so the fresh algorithm pop at the beginning of the day. And only anticipating breaks on continuation. So just these 5 things have significantly reduced the amount of, nonsense and false rejections that I've been dealing with the majority of my trades during this simulated trading in the past. So stock having fresh news means that we know what the catalyst is. If we can read the news and say, like, this is okay, and price action mirrors sentiment, perceived sentiment of the news being good, then we know that the stock might move up. Meets the 5 pillars if it's less than a 5 million share float and it has all of the bells and whistles, and we can be confident in the stock being able to move to give us at least a 2-to-1 ratio while it's moving, breaking high of day and moving in a certain direction and getting traders excited. One thing I'll add here is the top 5 leading gainers. So the stock being in the top 5 leading gainers means that it's going to be on people's watch list, and they're going to be watching the stock very closely, and it means it's going to have more volume and also contribute to being able to move 2-to-1. Only anticipating breaks on continuation. What I noticed is that let's cup and handle. What I noticed is that what I mean by this is, let's say the stock pops up and it fails to go higher on the first pullback, and it kind of drops down below VWAP, consolidates, and then it curls back up. Usually speaking, the second time that it curls back up, it rejects off of high of day, at least once, until support can come back up near high of day so that I can give buyers confidence to buy for the break. So that would be a cup and handle formation. If it comes up, rejects, double tops, and then sells off a little bit, but not far from high of day, and then it forms a pattern, and then it breaks through. But there were a lot of trades that I was doing in between that range where I was getting in to anticipate the break, it would reject, then I'll get back in, then it would reject again, and it would contribute a lot to my losers. So unless there's a cup and handle pattern forming, or there's some sort of pattern forming, I don't get into anticipate the break on continuation. I talked about in one of my my intermission episodes about anticipating the break, how I wanted to do that more because it was leaving a lot of money on the table, and I still want to do that. But on break of high of day before that, I'm not going to do it. But if it's first and second pullback after a fresh break or fresh breaking news, then I can anticipate the break because it's likely to be stronger, have a higher chance of breaking out. And so all of these things are quality over quantity. And this is the big thing that's been holding me back. Not trading quality. In this cold market, it's not about making money. It's about trading the stuff that has the highest edge and has the highest accuracy. Trading the setups that have the highest edge and the highest accuracy. And I've done my research recently, and I've looked at some different YouTubers and listened to Ross's education again. And I think this is the thing that kind of separates good traders from great traders, is, you know, focusing on quality over everything else, quality and consistency, and base hits as well. So that's going to be one of my major focuses. Even if I only take 1 trade, 2 trades, 3 trades, maybe even a maximum of 4 trades, quality is going to be my focus. The second problem that I was having. So let's talk about those big losses that I had. I don't know why I was still bold. Big losses. So the big loss that I had, I was actually doing pretty well up until that point where I made $50 on trading a breakout with fresh news, and then it spiked up to $14, and I got in at the first pullback, $14, and lost $70 on my second trade, and then I lost, you know, I jumped back in again trying to make it back on my third trade with 75 shares and ended up doubling my max loss, like $100 red day or something. I've also had a max loss day recently where I jumped into a trade. I added, but I added too high, and it ended up being a losing trade. And then I immediately jumped in and bought a dip, but I didn't sell the dip when it wasn't working out. I held and hoped, and it ended up, you know, bringing me close to max loss again. What is the problem with this? Well, the first problem, which I've dealt with, was position management. I took too big of a size on the higher price stock, the $14 stock. But I have solved that, and the way that I solved that was rearranging my keybinds so that I have a keybind in particular for every price range. You know, Alt A is my bread and butter. $2 to $10 stocks, $2 to $9 stocks, 50 shares being quarter position, and then I press the button 4 times if I want to take maximum position size. Q is for $1 stocks, so it's 200 shares. If I would trade $2 stocks, 200 shares is quarter position size for a $2,000 account. Alt W is for stocks greater than $10. It's just 10 shares. 40 shares being maximum position size, and I also reduced the maximum risk for all of these prices from 3% to 2%, just so the loss is, you know, a bit more digestible. But for higher price stocks in particular, I also reduced it to 1% because these are the stocks that have the highest likelihood of completely smoking me out and giving me a big loss. So more caution with higher price stocks, reducing my maximum risk, and focusing on my bread and butter between 2 to 10. We've solved that. There are some other emotional trades that I did take. For example, jumping in after not getting filled. I mean, that's not really something that I can deal with right away. I just have to make it a habit that if something doesn't work out, then I need to take my hands off the keyboard. Or if I take a big loss, maybe I need a rule where if I take a big loss, You know, I take my hands off the keyboard for at least 5 minutes to recenter myself. I don't jump into something else. So, self-control. And this is the biggest thing that I need to work on. And this isn't something... Self-control and emotional management. This is something that is better done with real money if you can afford the tuition, in my opinion. Because when you're in a simulator, emotions aren't running as high. Being in a simulator is not the same as if you were trading with real money and watching money disappear before your eyes. It's not the same. You know, I don't recommend anyone to lose money. I don't recommend anyone to jump into real money before they're ready. You know, but it is my opinion that you should trade with a size that you're willing to lose, but also triggers you emotionally so you can get used to the feeling of losing. Because you need to become a good loser to become a good winner. And that's my opinion. So this is something that I want to see if I can continue my self-control through money. And you know, it's very possible that I lose, that I end up losing. You know, starting with for money now, that I continue losing, especially in the cold market that we're in. I have a feeling that it will heat up soon, but right now is the biggest test of patience, discipline, and self-control and emotional management. Not to jump into anything that's moving, but focus on quality over quantity. Something that I didn't add up here as well was, you know, well, I guess I did add it. So breaking out high day fresh pop, so focusing only on stuff that's breaking out, but I guess I could add something to that is that, you know, we removed the leeches, I guess, the way I'm going to put it, which is we removed the setups that were leeching money. So curling setups were leeching a ton of money off of me. If I hadn't traded the curling setups, I haven't traded the VWAP setups, I would actually be pretty good in terms of my P&L, my win rate. Also, but you know, there were still those big losses. I mean, you'd have to remove the leeches and remove those big losses, and it wouldn't be bad. So I will start trading with real money today, but I do have a rule for myself. You know, how much money can I stomach losing before I have to go back to the simulator? That's going to be the question, right? And I think that would be maybe like 15% of my account, which would be about $300. Right now, my account is just under $2,000. I think it was at 1970. A few weeks ago, I had actually intended to start trading with real money 3 weeks ago, but I extended that because I wanted to do a bit more back testing in the simulator. But it was over $2,000 3 weeks ago, and these are a couple other reasons why I decided to start trading with real money. Is that I'm still paying for the data fee in TradeZero, and I'm also paying for Day Trade Dash. The Day Trade Dash simulator subscription is renewing this week, and I didn't really want to renew it because I intend to trade with real money soon, or I intended to. So I decided to just go live with it today and cancel the sub, which would cost me another like 100 and whatever dollars, Canadian dollars, like $90 USD, but that's like $120 Canadian or something. And I'm also paying the data fee in Trade Zero. So I was at $2,000, above $2,000, but it's at like 1970 right now after paying the $50 data fee. So, you know, part of this 15%, this $300 would have been paid towards the Day Trade Dash simulator anyways. And that data fee that I've just kept running. So I can stomach losing $300 before I have to go back to the sim. But the goal is not to lose $300, right? The goal is to keep our head above water at the minimum before we get into this hot market. Ideally, start the goal small. The ideal goal is to maintain that $2,000 account size. We're starting at 1970, but I'm going to say we're going to maintain the $2,000 account size. That's the goal. And we're going to see if I can maintain discipline, emotional self-control, not holding and hoping while I do it. And if I can't, either we go back to the simulator or I trade with a commission-free broker and I significantly size down to a level where I can maintain self-control and I can see what that exact dollar amount is. Because I believe that self-control and emotional management are best done in a live environment rather than the simulator. The simulator is for back testing and proving that you can do the strategy profitably. And I can do the strategy profitably if this were a vacuum and this thing wasn't involved, self-control and emotional management. So that is my goal. So we're going to go back to stream start here. I've been rambling for 20 minutes. So I changed my setup on the screen here, but I'm going to have to see if, I've traded with Trade Zero before. This isn't my first time trading with Real Money either, but this is the first time that I'm going to be trading with a risk-oriented mindset. I'm trading it with a mindset not to make money, but to maintain my current money and focus on quality. So we're going to try it from a different mindset. But the different windows I have here, I'm going to have to edit. I'll have to watch stream and edit them to see exactly what information they give, because some of it isn't very clear. And see if it gives the proper information. Me and the stream. I'm going to close that for now. So we're a bit late here because I wanted to go over that. But we'll go through and see what exactly we have going on today. So CLIK has been making noise. It popped up earlier on at 6:30, dropped back down, and now it's curling back up near high of day here. CLIK is a Chinese company, up 100%. But the news is revenue growth. And usually speaking, revenue growth isn't a very strong news catalyst. So CLIK. So our high there is 519. It's interesting though. The chart here on TradingView says the high was 517, but Trade Zero says the high was 519. That's interesting. Conflicting information, but it is what it is, I guess. So this is our top leading gainer for the day, up over 100%. But unless, according to our flow chart, unless it can break and hold above 5-day, then we're not particularly interested. MACD already crossed over once, so this isn't the front side of the move. We're kind of consolidating here above VWAP. It is 7:24 right now. We got a few other things kind of popping around. MNTS making some noise, but it doesn't have news that I can see. So I did go through all my hotkeys and make sure that things are working. We break through there, but high was 517 or 519, whichever one was correct. Trade zero or this one. I don't like how it broke Hive Day there and came back down. And once again, even though, I mean, this is our top leading gainer, but it's just revenue earnings. I don't know if it's going to have the strength to continue higher. So I am going to just trade with small size for a little bit since I'm trading on a different platform that I've been trading for the past month. You know, I could make mistakes. All of my hotkeys should be the same as they were in the simulator. It's just that the level 2 is going to feel a little bit different. The level 2, the time in sales. We're going to maintain a quarter position size for a little bit until I can build up a cushion and get used to it again. So it's interesting that Trade Zero also says that CLIK has 3 million shares outstanding. Oh, I see. No, they have shares outstanding and float side by side. So there is quite a few insiders that own shares. this would be an example of, a stock that I might have traded in the past for the break above 5. If this broke quickly here, if it did break through quickly, maybe I would have got filled at 508, 507. Or even if I had waited, like I might have waited until 5-day break. If I bought at 520 and then it rejected back down, this would be a loser. But my rules right now say that, we're double topping here. So I have to wait for a break and hold unless we're forming a cup and handle. This is technically a cup and handle on the 1 minute here, but it's not very clean. Not a very clean setup. A lot of topping tails. So I could have entered at 495 for like a 20-cent winner. But I decided not to because it's just revenue earnings and, it's not really a clean entry candle. MACD was already like very close to crossing over here. Like it almost crossed over. It did cross over for a brief second before it came back up. So GAMB has been popping up in the scanners, but its float is too high, 20 million shares, and the 200 moving average is at 6. I'm not interested in that. Look at the S&P 500 today. It's close to all-time highs still moving up. Very impressive that we're kind of just muscling through even with everything that's going on in the Middle East. And of course, oil prices went up because of Trump's recent tweet. Gapped up from 133 up to 138. But isn't this quite interesting? $600,000 shares at 2 p.m. on Friday, nearing market close. A sudden spike of volume here. Whoever did that must be feeling very proud of themselves. So this is the part of discipline where we sit and wait. And wait for something good that pops up. So the other part that I didn't go over in my notepad was base hits. I'm going to be focusing on either 1 entry, 1 exit, or 2 entries, 2 exits at most for a while. And since I'm not going to be doing scaling as much later on, as I build myself a bit of cushion, so cushioning into the, there's not just scaling into the day or scaling into the trade, but there's also scaling into the day, scaling into the week, scaling into the month. So as we're starting the small account challenge here, we're going to start small and we're going to scale up as things start to work. And that includes, later on taking bigger size when stocks present the opportunities. When there's a really good stock with a really good setup, it pays to take advantage of it when you can. And the stocks that I'll be looking for to take advantage of are stocks that come out with fresh news, that are within my price range, have less than a 3 million share float, and are up ideally more than 50% on the day, putting them into a top 5 leading gainer, but it needs to be at least up 30% on the day. But the stocks that we're taking advantage of are going to be up at least 50%. Right now, it'll be just a waiting game for a while. There was another factor that I wanted to start trading with real money, and that's for entertainment. You know, it's not fun. I mean, there are some people who have been sticking around for watching me trading in the sim, but I also realize that it's more exciting for people to watch when, there's actual stakes on the line. And if I start losing a significant amount of money, I'm not going to continue streaming for entertainment, but you know, it is money that I can afford to lose. I'm not planning on losing it, but I'm not going to have huge expectations. I'm just texting somebody on the side here, but um, we're coming into the PDT rule change, which is why I wanted to get a bit of a starter on streaming with an account size that is relatable. A $2,000 account size is the exact account size that people are going to be trading with when they open up their own accounts with the PDT rule. It'll be interesting for people who are doing their research to, come and see what it's actually like trading with a $2,000 account. Of course, the disclaimer that traders always have to make is that results may differ. Even if I start making money, and my results aren't going to be typical, and that most traders lose money, yada, 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 the whole spiel. But it'll be more entertaining for people who stop by and watch the stream. But I do believe that if I can keep my wits about me, then I can become profitable. It's going to take discipline, dedication, a lot of experience. I've only been trading for 9 months. And the expected timeline for somebody to really become consistently profitable, I think, is about 2 years. 2 years on average. We'll see what happens. We'll see how long it takes me. But I don't plan on giving up anytime soon. So 5 minutes to 7:45. there's nothing particularly interesting to watch right now. Our top 5 leading gainers are all higher floats except for CLIK and NVEC. But NVEC is a $117 stock with no volume. So without CLIK moving and breaking high of days, I basically don't have anything on watch. If we look at continuation, I mean, I could look at some continuation stocks. SOBR has been slowly moving up over the past few days, and we are above VWAP. But it needs to get up to $2 for me to be interested. VCX, we gapped up from the previous day here. But it's a $200 stock. So we're not trading that. SCGG, I think this was stock from the other day, wasn't it? No, maybe not. But it needs to get back up to 160. We're at 140. It's a cheaper stock. If it does break 160, then it will be breaking out of that daily level there with room up to 230. But I'm not, it's a 10 million share float and a lower price. I'm not really too optimistic about this one. And as you go further down, I mean, higher float, higher float, higher float, and then most of them are just aren't up enough on continuation to consider trading them. We're just chilling. So one of the interesting experiments I'm going to be doing on the side here is with TradeZero, I have an extra chart up that I don't normally have, and that's the 15-minute chart. I'm curious if that's going to make any difference at all. Just watching sometimes the higher time frame charts. On the higher time frame right now, we actually have a bull flag forming on CLIK. So I'm curious if in the next minute, if it breaks above 480, this would be an actual curl back up high of day if it can break that 480 level for that bull flag. But the reason I have that chart up there is not for the experiment. It's because for some reason TradeZero's level 2 displays incorrect high of days. Like it doesn't include pre-market or after hours when it's telling you what its high of day is. It only includes regular hours of here in pre-market. It's regular hours of the last session, so it still says 227 high for me. So I need to have the chart up because it has the actual high of day of whatever's on the screen. I preferred to read it through the level 2 or through the chart rather than moving my mouse to see what it is. If I'm in the middle of a trade, I can just glance over and see high of day. So I have that extra chart up there for that, but I decided to put up the 15-minute chart just to see. And so that candle ended up closing a long-bodied red. Now it's not forming a bull flag anymore. Another thing that I have to note is that I can't put level 2 on the screen. With the simulator, I had level 2 on the screen, but with TradeZero, I can't live stream level 2 data without potentially getting in trouble. I know Candyman streams his quest trade level 2, but I technically don't think he's allowed to do that either. But the last thing I want is to get in trouble with TradeZero and potentially get my account frozen because I'm live streaming level 2 data where I shouldn't be. So it is unfortunate, but I only have the order entry windows up here and the order history and open positions windows. My dog is sleeping, but he's making growly noises. He's dreaming about chasing squirrels. Or biting the mailman. So I should take note of where is it? Need my portfolio window. And show on stream right? No, it doesn't get okay. So my account size today exactly is 1973 and 91 cents. I'm going to take a note of that. I said my stop where I need to reevaluate is my account size is lower than 1673. So this account technically does give me margin. It says that my buying power is 3,947 and 82 cents. But that's actually not true for Trade Zero. The thing about Trade Zero margin is that it's on very specific stocks that it allows you to have margin. I think it's up to 3 times leverage, but it's very, like, it doesn't let you use leverage on most of the small cap stocks. Pretty much just allows you to have leverage on bigger bigger stocks with the higher floats. So you basically have to treat Trade Zero margin account as if you're trading in a cash account, except there's no limit to the number of trades you can take per day. It's just, you can only trade with your account value basically if you're trading small cap Momo, which is a bit unfortunate. But trading with leverage is outside of my risk tolerance, anyways, for now. I was curious to see if Centerpoint was going to change their account minimum, but I hadn't seen any news about it yet. Yeah, there's still no indication that they're going to reduce their margin account size. I was hoping if Centerpoint ever reduced their margin account size, that because I think Centerpoint Canada, it also has branches in the US. So if they reduce their minimum account size in the US branch for the PDT rule, I'm hoping that they would do the same in Canada. But it doesn't seem like they have any indication of doing that. They haven't made any announcements or anything yet. So Trade Zero does charge commissions. I mentioned it before, but Trade Zero charges about half a cent per 100 shares, or no, half a cent per share, or at a minimum of 50 cents a trade. So 50 cents in and out would be about, I think it was like $1.10 per trade. But 50 cents to buy, 50 cents to sell, and then you have extra fees and commissions. So it comes out to like $1.10 with all of the fees added up per trade if you're trading with less than 100 shares. But above 100 shares, it's 0.005 per share. It'll be interesting to see if I can keep my head above water even with commissions, and I should be able to with this current strategy now that I'm being extraordinarily picky with my quality. So with, an average of maybe 2 trades per day or 2.5 trades per day, then my average commissions per day with trading with 100 shares should be maybe about $3 or $4 a day. I think the data fee was like $40, 40 or $50 per month. So that would add an extra $2 a day in terms of data fees, considering there might be like an average of 20 trading days in a month or so. As long as I can make more than more than $5 a day on average, then I'll be able to break even with commissions and fees. That would decrease, the more shares that I trade with. Because even if I trade with 50 shares, I'm still paying the fee as if I were trading with 100 shares. So it would become easier to pay the commissions the higher the share size that I take. I'm starting with 50 shares, quarter size, 100 shares half size, 200 shares max size. The account starts growing, then I might slowly increase my size to accommodate the growth. But I would probably do it on a week by week basis. On a week by week basis, if my week is green, depending on how much I'm up, if I'm up at least $100, then I might slightly increase my share size to accommodate the extra $100 of buying power. $100 of buying power with $5 stock on average is only 20 shares, but it's not nothing. So BNAI is making some noise here, but it's a bit too expensive for me. This is definitely not a price range that I'm willing to trade for the very first time trading throw money. Too risky. The volume is much too light. 1,000 shares, 2,000 shares. It does have news, but I think it's just earnings news. Form 8K. Reseller agreement. So they're selling part of their software, I think. No, I don't really want to read all of this, but they're selling something. I don't know. Anyway, doesn't matter. I'm not trading it. Too expensive. It'd be a terrible way to start the small account challenge. Would be to trade a higher price stock, get smoked on it because it's trading with light volume, and it's got a range of, $2 a share. Even if I only trade with 10 shares, that's $20. So I'm not interested in BNAI. KIDZ is kind of funny. It regained NASDAQ compliance not very long ago, and it's already back below $1 a share. That was the headline a few weeks ago that sent the stock up, was that it regained NASDAQ compliance. That's back to 80 cents. Quite unfortunate for them because they're going to have to do another reverse split in order to keep their compliance, or they're going to have to come out with really good news. Doesn't seem that the news today has been enough to send it up over $1. So 8 a.m. coming and going here. I don't see anything popping up. This is going to be one of the difficulties of trading in this market with real money, which is why I've been part of the reason why I wanted to delay it a bit longer. Back in, I think originally it was back closer to the end of April that I said I wanted to start trading with real money in May, but then I ended up delaying it because of that big loss, and then we're still in a cold market. But I chose this for myself, so even if we take no trades today, no trades is better than a red day. And this is our test of discipline. There was an interesting video that I watched the other day that helped me regain some of my confidence in my performance in the past month and a half. And what the person said on video, I don't remember his name right now. Maybe it's in my history here. Look, but it was about drawdowns. Yeah. I don't see it. I don't remember how long ago it was. But anyway, what I was gonna get at was he was talking about how mathematically speaking, if you have a 60% accuracy or 50% accuracy, you can just by probability of random chance, you can enter a significant drawdown of like 15 or 20%, depending on your strategy and your win-loss ratio. So depending on your win-loss ratio and your profit-to-loss ratio, you can actually enter a significant drawdown just by probability of random chance, even if you do everything right. And that's just the nature of the markets. So a lot of people end up doing is that the moment they enter a drawdown, the strategy might actually be working and it might actually be profitable. But the moment they enter a drawdown, they think that there's something wrong with the strategy, or they think there's something wrong with themselves. Putting aside any emotional discipline problems, let's say there's none, you can still even enter a drawdown just by probability of random chance. And instead of keeping going, keeping working with their strategy, they start strategy hopping, even though that strategy might have been profitable. They didn't give it a long enough run to actually test if it was profitable. And if that drawdown was just random chance, or if it was something that they're doing. When you think about the markets like that, it does take some of the pressure away from yourself, so to speak. As long as you focus on the process, not the outcome, and you start telling yourself that I did everything right. You enter a trade, you stick to your discipline, you stick to your rules. And by the end of the trade, even if it was red, if you followed all of your rules, then that was a good trade. You stopped out right. If you took the best entry you could, the stock selection, the setup selection were all, good quality. Even if the trade turns red despite that, that could just be random chance. It wasn't necessarily anything that you did wrong. And so over the course of a certain number of trades, things always return back to average in terms of statistics. There could be a time, especially in this market, where you can have 8 losers in a row. Very unlikely, a very, very low chance for that to happen where you have 8 losers in a row, where you do everything right. But it is possible to have, 5, 6, 7, 8, depending on what your accuracy is of your strategy and what your profit loss ratio is. Certainly possible to enter a drawdown where you lose many, many times in a row, but through no fault of your own, it just turned around against you. So what I'm getting at is that there is a bit of a different mindset when it comes to trading. You're thinking about probability, statistics, and edge, not necessarily the outcome. It makes losing a bit more digestible. Not to say that you should just ignore whatever happened when you get a losing trade and just brush it off and say, oh, well, this is just due to probability. It's nothing I did. You should always analyze and see if there was anything that you could have done better. But sometimes you might analyze it and say, I did the best I could here. It's just the trade turned against me and it is what it is, and you can move on. YYGH popping up here, but it's a $1 stock. It's cheaper. So it's just a strategic update. This is a stock that had some high volume selling on a previous day. It's kind of interesting. I don't know. It's lower priced. It's again $1 stock. I'm generally going to ignore these type of stocks unless they have a ton of volume and they have a proper 1 minute pullback around VWAP on continuation. Otherwise, I don't touch $1 stocks. Setup needs to be very specific for me to want to trade a $1 stock. XGN just released news at 8:08. Again, it looks like it's just earnings reports, and it has a 16 million share float. This isn't a stock I would want to trade. So Ross also has no trades this morning, which tells me I'm on the right track in terms of picking for quality. It just hasn't been anything interesting this morning yet, except for CLIK. Maybe back here. So I sat down at 6:45 and did my recap. But it kind of just bounced off of this level of resistance up here. Hope something pops up at 8:30, because if there's nothing at 8:30, then it's likely that there's not going to be anything at 9 either. I would like to take at least one trade today because I would like to see how my order windows look on stream so that I can edit them for the next day. But if there's nothing, then I'm not gonna go wasting money just to test. One thing I forgot to do was update my description. I'll update my description after stream. You took second pullback on CLIK. Yeah, there. I see that 5-minute bull flag there. Da, da, da. Yeah, I can see how that surge of volume happened since this was a 5-minute close right here, right before that surge in volume for the high of day break, right after this red candle. MACD crossed back positive there as we broke that level. The reason why I didn't take the trade was this seemed to be just earnings news. And I prefer to look for an entry candle before I make an entry. So this is a green bodied candle here on the 1 minute, which technically is an entry candle. I could have taken the trade, I guess, from 495, but it only had 20 cents of room to move. I just wasn't very confident in it considering all of these topping tails. Just didn't look good. I didn't want to take my first trade in a live account on a setup that I was uncertain of. I probably wouldn't even taken this in the sim just because of all these topping tails. It just makes me nervous. But I can see what you're talking about there with that 5-minute bull flag for breakthrough high of day. Second pullback at 713. Oh, I see. Yeah, this micro pullback. Yeah, MACD crossed over. We reclaimed VWAP. I volume increasing. Micro pullback there for first candle. Make a new high. Break of 450. But yeah, that was a decent setup. I think I might have been rambling while this was curling. If I didn't see this. But I still might not have traded the micro pullback. It's not really a part of my my setups right now. Because this is kind of more like a curling pattern right here. I would have probably waited for the cup and handle. Curling patterns have been eating me alive recently. JZXN making some noise. $1 stock, Chinese. It's quite strong, up 67% already. This would have been a nice ABCD pattern for the breakthrough 130 on the 10-second there. It's just that JZXN, I believe, is one of those stocks that's kind of notorious for not trading very easily, not trading very smoothly. This is a stock with a bad history of selling off, and it's Chinese. It's also kind of too cheap for me right now. Quite the rejection there from 160 all the way down to 120. 40-cent range on a $1 stock is a huge red flag. For me, if I were to trade a $1 stock, I would have to trade it with higher share size with the expectation of a 10-cent move. That would be my profit target on a $1 stock, would be about 10 cents. 5-cent stop. So the risk on this would be very high because I'd be taking like 200 shares would be a quarter position. Obviously, I wouldn't hold it all the way down, but 40 cents on 200 shares is more than my max loss. And in this one candle here, 157 down to 147, it dropped 10 cents in a single 10-second candle. A bit too risky. Nice job on that trade there, though, on CLIK, Bass. Good that you found something today. Yeah, because if we reach 8:30 here now and there's no news, and it's likely that it's going to be a no trade day for me. So 8:29. We'll see if we get any more news. I probably should check my hotkeys to make sure that they saved properly. I edited them last night. Okay, they did. 50 Alt A, 200 Alt Q. Yeah. Day plus, day plus, day plus, day plus. Then we have 25. Auto send 10. Order 10. Okay. So they did all save, so we're good. I'm watching the news. BLG popping up, but it's a $1 stock. It is biotech. It's interesting that it bounced off of 160 there because that's where the 200 or the 20 EMA on the daily is. It's got a hantavirus catalyst, the stock quote. It is kind of funny how some of these biotech stocks are jumping on the hantavirus theme for the releasing of news. Seen a few couple hantavirus catalysts recently. Ross has talked about in his last video, I think it was, when he was talking about the no trade days. He was talking about how he wasn't particularly optimistic about the hantavirus headline catalysts. From the information that we've been receiving about hantavirus, it's not going to be another global pandemic in all likelihood. It's not like coronavirus. So probably just going to be a fad for a little bit. People fear mongering about there being another pandemic. In reality, it doesn't have the transmissibility that COVID did. It looks like there was no more news today. There's still the possibility that news releases at 9 a.m., but it's not very often that it does so. 9:15. So in all likelihood, our first small account challenge day is just a test of discipline. No DYS popping up. It has an 8 million share float. They signed something with the US Navy. That reaction to it popping up to 650 isn't particularly optimistic there. Just kind of sold off. Daily level at 760. BYS is slowly becoming our leading gainer, up 40%. Does have room up to 760. Problem is that it has a bit of a higher float, 8 million shares. It's a little bit outside of the flow range that I would normally like to trade in a cold market. It usually means that it's going to be easy to borrow, so these first pops can be a little bit tricky. I want to see if it holds up. We're also reaching this daily level of resistance at 760 right now. 760. Moving quite fast. I just can't get in up here because it's too extended now. I could have gotten in on this first pullback here. Could have gotten in on the second pullback here. It's just that I see some people saying that it's easy to borrow in the community. It does have room. We are in a bit of a gap, and it does have room up to 10, but I would like it to do a proper 1 minute pullback though. Like, the fact that it's easy to borrow is just throwing me off. I don't want to jump in and then get smoked. So I would like to see it do a proper 1 minute pullback. But we have increasing volume on the buy side right now. Already up 100%. And now we're above $10. That's really good to see. It's really strong. Moving up 100%. 6, 7 green candles in a row. On the daily, the next level would be up at 1080. And then we're filling a huge gap here. So if it breaks above 1080, then we might be in business. So we're doing a 1 minute pullback right now, but we are a bit higher priced. We're getting close to $10. That selling candle was pretty high volume selling. I was 1050. Breaking 1080, do we hold 1080? I was right to be cautious there. Although it did pop up to 11, there was a little bit of room for me to take some profit from 1020 up to 11, for sure. I just didn't enter because I don't like how this pullback was formed by two long-bodied dojis. So I would have preferred to wait for a bull flag with a bit of a smaller body. So it did end up popping up there and rejecting. I was looking to see if it would hold 1080 and continue higher. If it held 1080 and then broke back through 11, I probably would have taken maybe a 10 share position because of this big gap up here from 1080 all the way up to 56. It could have really pulled away if it held 1080 there, but I have to be cautious up here because now we're a bit expensive. So, you know, I don't want my first trade getting me smoked on an easy to borrow stock. Ross got a nice trade on it. He got 12,000 bucks there. He bought for break of 10, it looks like. We're coming back up again. The high was 1105. The Ross got in right here for the breakthrough 10. That was a nice bull flag on the 10-second there. Like I said, though, on the 1 minute, I decided not to take it because it didn't look good on the 1 minute. So we are holding 10 here and creeping up. $15 seconds left on that 1 minute candle. We're rejecting off of 11 again. Okay, so we're pushing up. I'm going to take a position here. Stop is 11. Looking for the squeeze up to 1250. The cost basis is 1150. Got in a little bit high here. But I'm just in with 10 shares. We're being cautious. So stop is 11. This could be the first pullback after a fresh breakout. I'm looking for the squeeze up, filling that big gap. We broke down. I'm just getting out. The high was 1167. If we hold, I might get back in for the break of 1150. we hold. So I'm going to add back. Stop is 1150. Looking for the squeeze up to 1250. But we're rejecting, so back out. I don't like how this stock is trading up here. I would have expected that a breakthrough 1150 would see a big squeeze because we're in the middle of this gap here. Now I'm 2 for 2 on this, which I don't like. 2 for 2 losses. Now we're breaking out. We hold 12. I don't know. It's super choppy. Popping up, dropping down, popping up, dropping down. This isn't the price action that you would normally see from a breakout. Feels heavy. The high was 1207. So we break 12. Do we hold 12? We hold 12. So I got in too high again. I clicked the button as we spiked up there. So I'm looking for 13. Looking for 1350. I'll take my profit if it bounces up back up to 13 again. I really don't like this price action. So we failed to break 13 there again, which I don't like, so I'm just back out. I don't know. This price action to me is like I don't like higher price stocks. It's just way too choppy, it feels like. I also filled too high at 1250. Like I'm just wondering at what point do shorts capitulate and we fill this gap? That's what I'm wondering. Yeah. I'm only trading with 10 shares, so I'm not risking anything big because I'm aware that what I'm doing right now is very risky. My first two trades were losses, but it's only like $4. Uh, $3. So down 7, up $2 here. I'm down like $5 right now plus commissions. I'm down like $8. It's just that trading with 10 shares up here in this gap, like at any point, this stock could just absolutely fly. Like it could just pull away and go up to $25. So although the downside risk here, I'm getting out 50 cents a share, 40 cents maybe on average. I was expecting this to have the potential to give me a return of maybe like $1 or $2 a share. At this point though, we're already in this gap and it's trading this choppy, so I think I'm just going to leave it alone now. I don't know. Unless this gives us a nice 1-minute pullback here, but MACD's close to crossing over. Maybe you're right about the hotkeys though. I do have do I have hotkey set up for 10 shares? Yeah, I do. I have a hotkey set up for 10 shares only. So maybe that was the play. So I don't get filled too high. So you're right. I should have used the hotkey that I set up for this situation specifically. And I did see this pullback here on the 1-minute for this breakthrough 12. So I tried entering right. Whoops. I tried entering like right there on that pullback after I saw it holding. Yeah, I just entered a bit late. Got filled up at 12.50 as it spiked. Ended up only getting 20 cents a profit. Back here, I probably should have paid more attention to this candle, that entry candle for the breakthrough through 760, which was at previous daily level. It was just, the stock was easy to borrow. So I just wasn't sure about it. Yeah, I agree with you. So I always do that for $3 to $10 stocks because I have a hotkey to load for 50 shares, and that I've used pretty much all of the time. It was only recently that I made that hotkey for a $10 and above stock. I didn't used to have that hotkey. So whenever I was trading higher price stocks, I was used to just using the hotkey to do them. Because for the longest time, like I wouldn't even consider trading higher price stocks, so I just didn't have the hotkey. But I always load for lower price stocks, but I should get into the habit of doing that for higher price stocks too, because especially higher price stocks, where they spike up 50 cents like that, definitely more of a risk getting filled too high. My hotkey puts it 10 cents above the ask. I think for a $10 stock, it's 15 cents I put it above. Right now it's 960, so I'd put it 986. If it's a 3 to or a 2 to $10 stock, I have load 50 shares 10 cents above the ask for my hotkey. And then I can adjust it using price arrow. So up arrow is 970, so it goes, 10 cent price increments. So I can quickly set them. And then left and right is share size by 50. So what I mean is I have two different hotkeys. One is load and one is load and go. So load and go is the one that just fills at whatever price, 10 cents, 15 cents above the ask. So that's load and go, like that just automatically goes and fills the order. And then I have just load, a hotkey for just loading the ask. So like ILNK. So right here, for example, Shift A loads an order for 50 shares, 10 cents above the ask, but it doesn't fill the order. Like it doesn't put the order through. I have to press the enter button for it to actually put the order through. So I think my order entry window is actually on the screen there. All right, but this has news, non-binding letter of intent, up 45%. So like right here, it would load at 580, but it loads the order, it doesn't put it through. So I have the option of changing the price on it in the actual order entry window before I press enter to put the actual order through. So I use hotkeys to set the orders. Like I don't click the actual ask price to set the orders. I use hotkeys to set the order in the order entry window, and then I press the enter button when I'm good to go. And that's what I usually do for most of my entries. Must be sniper entries. I mean, yeah, it's not necessary to have hotkeys for filling out your orders, I guess. Feels I just like things to be faster in all regards, I guess. So I don't like this high volume rejection here, 574. We are coming up with even higher volume buying. We are at 46%. So this is in the price range that I like with the 1 million share float. It has news, it's up 55%. I might look to enter for the breakthrough 575 here. But we're kind of double top rejecting right now, which is not good. So looks like this one ended up getting targeted by short sellers, unfortunately. And ODYS pretty much came all the way back down to 9. So it looks like we're not really going to have any other opportunities today, unfortunately. So the only thing I don't have on my screen right now is day realized profit. I wish it would just stay in my my open positions window. I'll have to figure out a way to organize this so that I can at least show my day realized profit or loss. Let me open up my portfolio window here. So right now our day realized loss is negative 740. Estimated commissions and fees are 294. So we're minus $10 today on ODYS. Do I regret anything on ODYS? I don't think I regret not getting in back here on this rejection, on this bull flag. This is where Ross got most of his profit, I believe, was back here. I think he took an entry up here as well for the breakthrough through high of day, 11 up to 12. I don't regret not getting in back at the beginning of the move because the stock was easy to borrow. And the news was pretty slow for people to like it had pretty slow reception. It didn't move for almost 3 minutes. But by the time it did its first proper pullback, it was already up at $10, which is higher priced. I couldn't get in back here because it was easy to borrow. I regret up here a little bit because I got filled too high, so I should have used my order entry window for a limit order at a certain price. But I still ended up making 20 cents of profit on it, so it wasn't that big of a deal. I would have gotten more if I was a bit quicker. It's just these higher price stocks move so quickly that it's hard for me to make money on them. It's just unfortunate that this was the only opportunity that we had today. It did move up quite a bit, which is nice to see. It's just that the circumstances aligned so that ended up down $10 today. Not a big deal. I doubt we're going to see any more news at 9:15, and I'm probably not going to trade the open. Because there's nothing I'd really be interested in at the open. CLIK is below VWAP, and this is now also below VWAP. If it ends up curling back up before the open, maybe I could consider trading it. But once again, like it's above $10. However, I will say that this stock does have the potential to go up a ton because of this big gap here for a gap fill during the open. If it gets back above 1080 and above high of day. We'll have to see, but yeah, that is one thing that I got to be more cautious of in the future is making sure that for my entries I'm using my order entry window instead of hotkeys. But I feel like I did okay. I mean, the areas that I entered here, 848 and 849, you know, they did have 2-to-1 potential. Oops. So 848. That was that break of high of day here. I ended up filling at 1150. So I ended up filling at the top here. So I should have set my order for maybe like 1125 here. However, because this was in a gap, I expected this to move more than 50 cents. Like 50 cents would be my target for a stock between $3 to $9. I expected this to go up at least $1 a share. From 1150 to maybe 1250 for a nice breakthrough high of day there. And then I re-entered back here, seeing that we kind of had a flat top. So that was re-entry at 849. The first entry was there. Second entry was 849.28. So it was right there. I got in here, and the second time, only 10 shares because I saw that we broke. We kind of held here with this flat top again at 1150, and I bought for a break of 1150 because I thought, you know, we're above this daily level now and we're holding. I thought that, you know, this thing could pull away $1, $2, even $5 a share at any time. But it didn't. It was only moving 50 cents or so at a time, which is really heavy for a stock above $10. Thanks, Bass. Yeah, I don't think I regret these trades. Even though I'm down $10 today, I think they made sense. I'm just kind of astonished that like we had this huge gap, but like it ended up being that heavy. Yeah, I did get filled high. I should have used my order entry window. But even with getting filled high, like I said, like I expect usually on these $1 or $10 stock or $10 and above stocks, my profit target on them is usually a move of $1 a share at minimum because they tend to move at least $1 a share. The fact that this would pop up 50 cents and then not move anymore is what was throwing me off. So the break through 12, I would have expected it. It did. This one did go up to 13. Yeah, this move right here went up to 13. This is what I would expect. But I got filled high on this one, which is my own fault. Back here, we popped up 50 cents, but then we didn't move anymore. We popped up 50 cents, but then we didn't move anymore. And, you know, I think that this had even higher potential to move more than $1 a share because of this gap back here being over the daily levels. So I thought even if I got filled high, that I should have the opportunity to take profit if it really pulls away. So I don't think I regret any of that. Just got to keep in mind in the future to get used to using my order entry window hotkey for stocks above $10 because I do have that. I do have that ability now. So let me see if I can get my P&L on the screen here somehow. What's the best way to do this? Portfolio. Keep that like that. So portfolio. Do. It's as good a spot as any, I guess. So down $7. Not a big deal. Oh, so I'll have to keep an eye on that to see if that that stays there next time. I'll save my layout. Another AI headline on this. But this is kind of a garbage stock. Just been selling off since it first IPO'd. Some could say, I mean, how much further could it go down? It's already hit rock bottom. The only way it could go is up. But someone might have said that like way up here, right, before it tanked. It is good to see though that we're kind of moving today. We had some stocks moving. Otis moved. JCX and moved. This is moving, but I'm not particularly interested in this one as it's a lower priced. We did quickly go up over $2 though. It's kind of interesting. It's got a 1 million share float. Got an AI headline. We'll see what it does here if it gives us a proper pullback. I have a feeling that since this is a bit of a garbage stock, it's not going to give us a clean pullback. Already got high volume selling. So put Otis on a side chart. I'll keep an eye on Otis for the open. But I don't like the selling on the 1 minute on walk here. LINK slightly curling back up, but after that big sell-off, I don't think I would like to touch this stock. We've got 7 minutes to the opening bell here. Walk is now also selling off, as I expected. I mean, this would have been great down here for breakthrough 180, went all the way up to 250. 70 cents on a $1 stock is exceptional. But, you know, since it's a garbage stock, you can't guarantee that it's going to do that, even if you get in for the breakdown here for breaking news. Normally on a $1 stock, I would only expect 10 to 15 cents as my first target. So if I got in down here with 200 shares and it went up 70 cents, it's like 140 bucks, which is kind of crazy. But I have to wait for these things to hold up before I jump in them. And it didn't end up holding up, sadly. So, ODYS is kind of curling back up here. I think we sold off a little bit too much for me to consider it at the open. Unless we can curl all the way back up to 14 for the opening bell. And I'm not sure I'm going to trade this. There's a very high likelihood that I trade this at the open and just get smoked. Because it was already hard to trade during pre-market. Now at the open with stop orders and the increased volume. And halt bans and dealing with halts. I don't know. It would be very risky for me to trade this at the open. I'm going to be honest with myself. My first goal is not to make money. It's to preserve money. So, does this have the possibility of filling this gap back here? And just going crazy? 100% it does. It could fill all the way up to $50 today. Should I take the risk? Probably not. It still is our leading gainer on the day, up 100%. But after this big sell-off back here, 2 million shares of selling volume in rejection, that 5-minute candle, coming all the way back down from 13 down to 8. Might just be a bit too risky. I probably want to wait for tomorrow for something that is a bit better. This thing is also an 8 million share float. That's the original reason why I didn't trade it in this first leg in the first place. It's easy to borrow with an 8 million share float. Ross is already off for the day. He took his profit and just booked it. Stick around for a little bit to see what happens here, but I'm probably not going to take any more trades. So we got 30 seconds to the opening bell. Just for Giggles. I'll fill out some levels here. Even that I'm not sure about. Maybe down here. So it looks like it's probably going to gap up there. Or halt up, I mean, not gap. I wonder why my trade zero looks like it's lagging there though. Noticed how on the chart there, it was already up at 1080, but when I opened up my trade zero, it wasn't for some reason. That's very interesting. So this halt up isn't something that I would trade, even if I weren't kind of wary of the stock, because I made it a rule to myself not to trade the first 2 minutes of the opening bell. For all I know, if I were to get in here up at 1050 or 1014 for the breakthrough VWAP, the reclaim of VWAP, it could have just instantly reversed on me. The best place to get in if you were to get in right here at the open would be for this bounce off of the 20 or the 200 EMA on the 10-second. The bounce off and the hold of the moving averages. But I generally don't trade the first 2 to 3 minutes of the open anymore because I've gotten smoked doing that in the past. This is resuming at 11, so it's gapping up. So you could trade a dip and rip on it. Am I going to? No, not. I'll stick around to see how it plays out because I'm curious. But I think this is outside of my risk tolerance range here at the open. I already don't have a cushion on the day. I'm already down $7. It's a higher price stock, so it's more difficult to manage my risk on it. And it was already trading poorly back previously here, where I felt like it should have pulled away, but it just never did. And the highest volume of the day is still on the 5 minute, 2 million shares of selling volume, 2.5 million shares. I'm curious to see what happens here. But managing risk to me is more important than, potentially recouping this $7 red day. Yeah, it really is a gamble. The first 2 to 3 minutes, and then the subsequent halt up. It's just too hard to manage your risk on it. I have a feeling that this problem is going to get even worse once the PDT rule is changed and there's more volume coming into the market. As volume starts gradually increasing, the swings are going to get bigger. As Ross likes to say, and he said in his last video too, we're hunters of volatility, but we're managers of risk. There's a lot of volatility here, but if you can't manage your risk on it, then you're just gambling. I agree with you. Can't manage my risk on this thing. So it would be resuming here at 9:36:12, assuming it's not a 10-minute halt. So we're resuming in 12, 13 seconds. So I'm not trading it, but if I were to trade it, I would try and buy a dip at maybe 1075. So I would have bought there at like 1075, 1050 for the pop back up to high of day. But you see that straight into a halt down. If I had bought at 1075 or 1050 and I got caught in that halt down because I wasn't quick enough to get out, this thing could potentially go down to like $8. That's crazy. I'm just curious what the resumption price is now. So it was the right decision not to touch this. You could say that I could have made some profit back here at 990 for the squeeze up to 1070, but we're below VWAP. I can't guarantee anything. And trading the dip and rip is just as scary. So I'll stick around until halt resumption here on this thing because I'm just curious. If the halt resumption isn't longer than 10 minutes, I'll stick around. But I'm not taking any trades just because I'm curious. But I'll do my recap in the meantime. So today is a $7 red day, $10 after commissions. However, if I were to give myself a grade today on how I did in terms of trading and my discipline, I'd probably give myself a B, even though it's a red day. The reason why it's not A is because, as Bass said, I did fill a little bit too high. There was a little bit of hesitation in my entries because it was a higher price stock, and I'm very wary of them. And I should have used my order entry loads, so I should have loaded at a certain price so that I didn't get filled too high. But I think that the entries that I made, for the most part, they made sense. The reason why I didn't get in earlier, the move made sense. Easy to borrow, 8 million share float, bit of a higher float. So I think it's maybe like a B, B plus today for my performance, even though it's a bit of a red day. I think I made the right decisions today. Even though I got filled high back on my first two entries, or my first entry, not my second entry, and then I got filled high on the third entry. At any point where I bought, these stocks could have the stock could have absolutely pulled away because of this gap here, being a higher price stock up more than 100% of the day. I think one of the things I failed to take into account was the fact that it is an 8 million share float. So it needs a corresponding amount of volume to be able to make a bigger move. So perhaps because it was an 8 million share float, I should have expected only a 50-cent move. These are the reason why higher float stocks are a bit harder to trade, is because when short sellers capitulate, it usually capitulates in a big spike and then it doesn't move very much after that, compared to like a less than a 3 million share float where you have a bigger imbalance between supply and demand. The stock can go more parabolic very quickly and it can make bigger moves. So one of the things perhaps I should take into account in the future is if it's higher float, 8 million shares, 10 million shares, I should expect a corresponding amount of, I guess, lack of movement, for lack of a better term. I do still think though that it should have had the potential to move at least $1 a share, and most of those pops it just didn't. It is what it is. If I were to see the same setups again in the future, would I take it? Probably, because over a long period of time and a certain number of trades, I would probably be profitable trading those setups. Break of high of day in between a gap on a stock with fresh news and has pretty much every other box ticked. I think I would. So it looks like this is going to be a 10-minute halt here. Otherwise, I would have resumed right then at 41.44. So it's gapping all the way down to $9, which is this previous level of support down here at 893. Someone who is really daring, if it gapped down to $9 and it holds this $9 level, could buy the dip, since we are basically coming down from 1130 all the way down to 9. We're gapping down like over 2 points. Well, not gapping down, but we dropped down over 2 points. So someone who's really daring could buy a dip here for a potential pop back up to 950. Are we going to do that? No. Do I recommend anyone to do that? No. But it is a possibility. So I'm interested to see what happens. But yeah, so today's going to be a red day, but I think as long as I continue to focus on the process, $10 red day is nothing. Make that back very easily in a single trade. It is a little bit disappointing that my first day trading with real money is a $10 red day. But as long as I continue to feel that the actions that I took aren't the reason why the red day happened, then that's what matters. I do take a little bit of responsibility with the order filling, the order entries, but I think that my logic and reasoning was all right. So this is resuming in 2 minutes and 12 seconds or so. Assuming it's not a 15-minute halt, which it could be. If it ends up being a 15-minute halt, then I'm just going to shut it down though. I'm not waiting forever for this thing to resume. I'm just watching out of curiosity. And just a quick reminder why I'm not trading anything else at the open here. I primarily focus on trading the top 5 leading gainers if I do take a trade at the open for a gap and go. And the other top 4 leading gainers are JZXN, which is a well-known kind of a garbage stock that's not very easy to trade. CLIK, which is up 40%, but it's kind of been selling off all day. We're below VWAP. And then the other two are 20 million share float and 51 million share float. I only want to trade stocks that are gapping up with fresh news for the day or had after hours news and have been holding up above VWAP. Otherwise, I don't really want to trade them. So there's nothing interesting. Even though I didn't take any trades on Audis, there was nothing else interesting for me to even watch. So this should be resuming in less than 20 seconds. So as I said, you know, someone who's daring enough could buy down here at 890 for the pop back up to 950. Anyone who was quick enough to buy the first dip for the pop back up to 950 could have gotten some, and then here again as we're bouncing off this support level. As I expected, since we gapped down so far, we dropped so far, that it was very likely that down here at this previous level of support, you'd have a bounce back up. But this isn't part of my setups. We don't trade it. Even though I have an opinion about it, it very easily could have just smashed through that support level and then continued into a second halt down, considering it's up 100% of the day, right? Technically, it could go all the way and do a complete round trip back down to 5. This isn't a part of my setups, so I don't trade it. But I was curious, and this did end up working for a 50-cent pop. But anyways, I think that's where I'm going to call it. I'm not taking any more trades, as I've said. So thanks to everyone who stopped by. I'll be back at it again tomorrow, 7 a.m. Eastern time, as per usual. This time, I'm going to continue trading money in Trade Zero here. We're not going to trade in the simulator for a while. So hopefully tomorrow is a better day. But until then, take care, stay green, and I'll see you next time. Peace.